Okay. 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 Can everyone hear me? I don't know if you guys can chat or not. This is my first YouTube live. I had no idea that I needed to download external software to share my screen and all that. So if I have technical difficulties, please just bear with me. Is anybody able to tell me if they can hear me or not? Yeah. Okay. Perfect. Everyone can hear me. Brilliant. 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 Okay. Just gonna give it an extra 1 or 2 minutes here to see if anybody else can join. Hope you've all had a good weekend so far. And I apologize if I sound a little raspy or whatever. I've had a really bad allergic reaction to the pollen this morning, and it's fucked me up pretty bad. So yeah, if I sneeze or anything like that, please forgive me from now, but I've loaded up on some medication and some fluids, so hopefully everything is okay. It's going all right. Okay. So I'm assuming everybody in this room is a ES trader, S&P futures. Whether you trade the micros or ES itself, doesn't really matter. Levels are pretty much the same. As you know, main difference is just the value per point. So on the ES, on the big one, you've got $50 per handle. So if for every one full point, it's $50. Micros are $5. But so this stream is relevant to whether you trade micros or the big ES. All right, let's dive into it. So one thing that I think is important is to first figure out what is the context of where we are currently trading. So this is a concept that I like to call the environment matrix. So I'm just going to dive into it here and start drawing. So consider this. You've got your matrix here. Oops, sorry. This is not what I needed. I need the brush. Okay. Brush size. Let's make it kind of thick. Okay. All right. So think of this as a chart. Okay. So at the top here, you've got high volatility. High volatility. Okay. You've got your low volatility. Low volatility. And low volume. Okay. And actually, you know what? I'm just going to type this out because it's going to be easier. And over here, you've got high volume. So I'll make that bigger. Okay, so you've got your high volume, high volatility. And you've got your low volume, and you've got your low volatility. Okay? So you can think of this as a quadrant. So this area here, this is going to be a high volume, low volatility. This is low volume, low volatility. This is low volume, high volatility. And this is high volume, high volatility. Okay? So what can we expect in each environment? So we can expect this. So low volatility, low volume environment. Let's just make this larger. Usually before holidays, or usually before big event risk. Okay. So basically what we have is before a big economic release, so let's say that a day before NFP or a day before FOMC and the market's waiting on something, players aren't going to want to get too involved on that day. So you're going to have diminished volume, and due to diminished volume, you're going to have diminished volatility as well, right? So typically on these sorts of days, what you're going to have are these types of players are going to be present in the market. So the types of players that are present on such days are algorithms. So algos are mostly present, and these are the types of days where price action is choppy. So you know those days where everyone complains, oh, we're range bound, oh this, oh that, we didn't get the breakout, we didn't do that. Well, it's because there's probably a big event or a couple days before a holiday, and you just get that choppy price action, and a lot of people tend to get chopped up pretty badly on that day. And these are the days that algos thrive. So what kind of strategies can we use on a day like that? Well, on a day like that, since the algos are present, you're going to see we can utilize trades that involve flipping. So we can look for flippers in the market, and we can look for spoofers in the market. So those are the types of strategies that you would utilize. You'd be looking on the DOM for flippers, you'd be looking on the DOM for spoofers, and you would be playing accordingly to that. Or you could also position trade. Okay. So that is what a low volume, low volatility environment would look like. Do I need to clear this up, this low volatility, low volume in the black here, or will you guys remember that? Should I make that in proper text, or will you guys remember? Maybe I'll just turn it into proper text for you guys. Okay. Okay, so just gonna erase this, just so everyone's on the same page, in case someone jumps into the stream and cannot read my writing, because I'm not the best artist with the mouse here. Okay. I'm just gonna write this in just to make it easier. Okay. Low volatility, low volume, high volatility. Okay. Brilliant. Okay, so now we can move on to the next component of this quadrant. The next component of this quadrant is high volume, low volatility. So in that typical environment, what we can see is the following. In a high volume, low volatility, the market is usually trading within a long-term accepted value area. Then a long-term accepted value slash, or it may be building value or building value. Okay. Who's present on a day in high volume, low volatility? Well, on a day like this, you typically have your everyday day traders slash your market makers. Sorry. And on a day like this, what sort of strategies can we use? Well, we can scalp slash position trade. Okay. So high volume, low volatility. Usually trading within value or building value. Now remember, when you trade within a value area, these are short-term participants. These are your market makers. These are your algorithms. These are your day traders. Typically, you're not seeing the other time frame participants participating in this market environment. So in this type of environment, we can scalp. Now, why can we scalp? Because of the liquidity, right? It'll be easy for you to get out of your scalps due to the high volume. We can also position trade, so we can build a position and hope to then take that position, and if you're a swing trader or whatnot, that position for that price expansion. So this high volume, low volatility is usually price compression or contraction of price. So because of the high liquidity, as I said, we can scalp or we can position trade and position ourselves for that inevitable break. Now, the next market environment that we have is going to be a high volume, high volatility. So that's going to be up here. Just going to make this a little larger. Sorry, am I going too fast for you guys? Sometimes I might get carried away and speak too fast. Is everything going okay? Everyone's on board? Okay, brilliant. Okay. If I'm going too fast, just someone slow me down a little bit. Okay, perfect. All right. So the next phase is this high volume, high volatility area. So in this area, the market, I'm just going to bring this font a little because we've got some stuff to type. Market breaks long-term accepted value, and we enter price discovery. Price discovery is, as most of you must know, is we've now established value. So typically it would go high volume, low volatility to build value, trade within accepted value. Once that value is accepted, price breaks out, and then we've now broken out of this long-term accepted value, and we're now looking, we're now in price discovery mode. So remember, price moves up to shut off buying. Price moves down to shut off selling. So meaning of price discovery is that we are now moving higher, if we break out higher, to see at what point the buyers will be no longer present? When will the buyers be disinterested in this market? Conversely, if we're moving lower and we've broken out of long-term value to the bottom of the range, and now we're moving lower and we're price discovering downwards, we are looking to see when are we going to run out of sellers. So high volume, high volatility markets break long-term accepted value. We enter price discovery. So who's present in this situation? Well, we have, paint might not have been the best for this. High liquidity, and this is great for, you usually get your other time frame players here, and this is good for institutions, hedge funds, etc. What type of strategies? What type of strategies can we employ on a day when we are in price discovery? Well, price discovery, you get that move higher. You kind of get that trending day. So during price discovery, you get flows. So you get those flows coming into the market. You get those institutions, you get those hedge funds, you get that money, that one-way flow coming into the market. So typically trend days and whatnot. So what kind of strategies do we employ on that? Well, we want to be looking for momentum / breakout trades. Now, there are a lot of traders who perform very poorly during this sort of market environment. And the reason for that is because psychologically, we have to change our mentality. Typically, the average trader is looking to buy low, sell high, or short at the top and cover at the lows. And that's what everyone's taught to do. But on days like this, we're going to be momentum and breakout trading. So these are the types of days where we have to change that psychology, change that thought process, right? And we need to be buying the highs and selling higher, or shorting the lows and covering even lower. So must have shift in mentality to buy highs, sell higher, or short lows and cover lower. Okay, brilliant. On to the final area of this quadrant. This is quite, I would say, rare. A high volatility, low volume sort of day. So how would this play out? Typically what happens is that you get a market that's coiled for quite some time, trading in a compressed range. So when that market's trading in a compressed range, market will just shit the bed and just move lower, or suddenly just explode higher, catches everybody off guard, some sort of unexpected news event or something along those lines. And you just get that market shock, I guess, right? You get that market shock. Then the next day or so, there's too much risk in the market. So basically, on days like this, these occur after a large market shock. markets are coiled and then experience a shock which catches everyone off guard. Okay? After you have that, you kind of have everyone being like, what the fuck? Blah, blah, blah. What was that? And you kind of get some jitters, I guess. And in the following days that ensue this market shock, after market shock, you get high volatility and low volume. Now, why do we get the high volatility and low volume? Well, the algos and other machines are now turned off. And that's because there's just too much risk in the market. If you're going to experience a shock, you remember algos play for just, fractions of price movements, right? They're playing the bid and ask spread. If you're going to have these sudden movements, then it's not a good environment for the algos to be playing in. So algos are now turned off, and because of this, there is a lack of liquidity. Now, because of the lack of liquidity, you just have the market kind of like ping-ponging back and forth. So these are rare sort of days. Okay. So these are the 4 types of days that we have, right? Would anybody that's watching this care to tell me which environment ES is currently in? Anybody? Anybody have an idea on which environment ES is currently trading in? Low volume, low volatility. Okay. And anyone else? Okay. So let's go with the low vol epic silly rainbow dog. All right. It's a long name there. Yeah, you're saying that we're trading in a low volatility in a low volume environment. Okay, cool. Well, let's have a look at that. Okay, guys. So this is just a typical candlestick chart, mostly for a visual. It's not what I use to map markets. I just like to use it as a visual for volume. And basically, if this right here is a moving average set on the volume with a 21 look back period. I'm sure you guys can see that here. And so, yes, you're absolutely right. We've been compressed in this range, and we've been trading well below the average volume for the past 21 days. Okay. However, recently we are shifting out of that environment. So we're shifting out of that environment, and we could be almost moving towards a high volume, high volatility market, or that is what we expect. And let me explain to you why. Okay. I'm going to bring up the weekly profile. So just bear with me 1 second. Okay, where is the weekly profile? Okay, so we've got this. This is the daily. Oh no, sorry. This is the weekly profile right here. Okay, brilliant. Okay, so can you see all that? Can you guys see this? my monitors are vertical, and unfortunately the stream wasn't working so well when I tested it on the vertical monitors. So I'm trying to compress this onto just a standard landscape monitor. Everyone can see this profile? Everyone? Okay, brilliant. Well, okay. So low volume, low volatility, as I showed you on the volume chart. Let me just, I'm not going to roll this over right now just because I want to show you guys what we were looking at before I roll this week. Remember, we are in rollover. So this was the 42.38.50, 42.35. This was the high, the all-time high in ES. And this was made in the week of May 8th. And it was made during an overnight session. And then if you also remember, 42.35 the past week proved we had 2 days that kind of formed a double top there. Anyways, so we've now broken above this 42.38. So we are breaking above this long-term accepted range, and we are now entering untraded territory. We're in new highs. So we could be entering, sorry, that's my notes. We could be entering this area here of price discovery, high volume, high volatility, right? So the market is now breaking long-term accepted value. We are entering price discovery. And if I bring back and bring us back to here, when we initially broke above this 42.38, note the volume. Note this candle. Compare it to all these previous candles here. And look at how it's also been above that, that 21 look back period. So the breakout, the initial breakout, what day was that? I believe that was June 10th. The break of that candle was, or that level, was on decent volume. And remember, guys, everything is relative, right? Everything is relative in trading. Yes, it may be low volume compared to these days back in early March or in May or whatever the case may be. But everything is relative, and we've been in the low volume environment, and now we've broken out and we've got volume, which is increased relative to this period and relative to this 21-day look back period. Okay. So we are now entering this price discovery mode. So let's now take a look at basically what I did on Friday, if anyone's interested in that. So the purpose of this, I guess, webinar would be to show you guys what I was looking at on Friday, and then to show you one of the trades that I took at the end of the day. And then perhaps if there's time, we can take a look at what to expect this week. Okay, so let's just jump into it now. So I'm just going into this, my private Discord here, and inside the daily plans, I post these trade plans on a daily basis. So June 11th, this was the trade plan that I wrote in the group. From a weekly perspective, the structure is quite bullish. This week, we have managed to shift price, value, and VPOC higher. However, we have neared a key inflection point here at 42.38.50. Remember that 42.38.50 was the all-time high. It is imperative that value is built above this level in today's session. A close below here could weaken the weekly structure. Okay, so I'm mentioning that on the weekly, it's looking quite bullish, right? So let's go back and let's visit that. Okay, so why are we bullish on the weekly here? Well, it's quite simple, actually. We've been one time, so after this large volatile week here, we have been one time framing higher on a weekly, as you can see. One time framing higher, getting volume and price value and price are shifting higher. As you can see, after this, we got a little bit of volume built above this value high. This week, price and value has built above this value area. We kind of got value built within value in this week. However, last week, we've now successfully built value above prior value, and we've also shifted price higher, as you can see from around here. Okay. We have also broken above this 42.3850. We built a nice value area, a nice looking value, nice distribution, nice D shape here. And we've managed to close price above that key 42.38. So this is why I mentioned in that trade plan from Friday why we were looking bullish. Okay. So in my trade plans, I like to create two hypos. I don't like to pigeonhole myself into one scenario. Nobody can be so arrogant to think that this is what's going to happen. Just, A, B, C, this is going to happen. Price is going to go from here to here, and that's all that's going to happen. No, there is nobody who's that good to do that on a day-to-day basis and just have one scenario. As a trader, we're not predicting, right? You don't want to predict. The people who just say price is going to do this and this, they're making a prediction, right? That's where you start to lose money as a trader. As traders, we need to react. We need to react to what price is going to do. So in order to be able to react, right, just like a Navy SEALs or a Special Forces team, what do they do before their missions? They practice, they draw out different scenarios, and they prepare themselves for those scenarios so that when that scenario presents, they can react at the highest of their abilities and get the best results. So these were the two scenarios that we had laid out for the daily plan. Hypo 1, I'm actually going to, before I get into that, I'm actually going to bring up the daily profile for you guys here. So if I can just bring that up. Okay. Okay, so this is the daily profile, right? So if we're going into Friday when I made this, right? This would have been the Thursday profile. So this is what we would have been basing everything off of. Okay. So we're pretending that this hasn't played out yet. Okay. So it's Thursday night and we're making our trade plan for Friday. So what I said was that price moves above value area high at 42.4450 to 42.4375, and then uses this as support for a launch higher, right? So what I was essentially saying was that prices shifted value above this day. We've broken above this key inflection point, 42.3850, that I had mentioned in the trade plan. And now what I was saying is that I want to see price come out of this value area high, use this as support for an eventual move higher, right? To launch higher. The move higher off this level should be significant as we should be entering price discovery mode. Price discovery is accompanied by high volume, high volatility, as I explained to you guys in the matrix. If we do not get this entry and price drives higher at the open, we will be looking for momentum type plays throughout the day to take advantage of the flow type day. Okay, well, it's quite obvious that on that day, so now coming into this day, this is where we opened. We came in A, we immediately went up and then came down. So we never saw the order flow that we wanted above value area high. What we were looking for on that hypo 1 was for price to come in, break above value area high, come back, use 42.44 as support, right? Now it's all well and good to have a level, but what are the two components of trading? identify a level, and then once you're at that level, you have to know what you're looking for at that level to signal your entry. So at this level, at 42.44, what I wanted to see was that I wanted to see price hold a bid at 42.44. If price were to hold a bid at 42.44, or if we were to see absorption, I would then have been looking to get long for the move higher. We never got that. I'm sure most of you traded that day, so I'm not going to go into it, but we got a lot of flippy floppy at this level. It wasn't clean for the price action. So as soon as we broke down and started trading A, B, and C print, we then switched to hypo 2, right? Price trades back below the key inflection at 42.38 to 42.35. We could then infer that the move above this level was just a look above and fail. No new business to be done above. If this were the case, we would then start looking for price to break yesterday's value area low at 42.3250. I would then want to see price use that level as resistance to look for shorts. My target would be the weekly pivot at 42.17. If we manage to break down 42.17, I would then look to add to my position on price using this level as resistance. We should then see 41.90. Okay, so I was mentioning that I wanted to look for 42.3250 to start getting short, right? I wanted to see 42.3250 break, and then I wanted to see 42.3250 hold an offer, and then look to get short. So that's what we did in the group, all right? So why 42.3250? As mentioned on this day, 42.3250 was the value area low, right? And what we did there was when it broke, I'm going to be honest with you guys, I don't get every trade right. I'm not one of those people on Twitter that when I post things, I twist my words and make it seem like I caught the trade. In this group, we took this trade exactly according to plan. We broke value area low. I saw price come up and hold the offer at 42.3250, and I was in short looking for the move, right? As mentioned in this plan. We're looking for the target to be the 42.17 weekly pivot, right? So I was short. However, I initially got stopped out of that. Okay? So we reacted, we took the trade, we saw what we wanted to see on the order flow. However, it didn't play out this time. And that's how the cookie crumbles, right? You're not going to win every single trade. So then what we noticed was, if I go back to the Discord group, I mentioned this. Where are we? Okay. I mentioned in the group that we were then going to be, I just can't find the exact thing here, but I mentioned in the group that we were then going to be looking to build value on that day. And what happened was that, and why did I say that? Well, because we've popped above this value area high, we've popped below this value area low. So price couldn't, price looked up, there were no more buyers. Price looked down, no more sellers. So what's left to do was to try to establish a little bit more of a value. So I thought that we were going to be range bound for a bit. However, late in the day, this is what I saw develop. I'm just going to bring up a footprint chart now for you guys. Okay, anyone have any questions so far before I continue? Any questions? Just take 5 for some questions. Okay, great. I'm glad you guys are enjoying that so far. Okay. Well, no one really seems to have too many questions, so I'm just going to get on with the next bit. Okay, so remember, as I mentioned, according to the hypo 2 of our daily plan, we were looking for price to break below this 42.30 to 50, hold an offer, and then get short, right? But that is not what happened, and we ultimately got stopped out. But then look what we have on the footprint here, right? On this footprint, we have 900, I'm just going to erase this, 996 on the bid. 996 sold into the bid. That is a very high number of traders who sold the low over there, right? Now, one thing before I move on, this is a footprint chart. If you note, this footprint chart is a volume-based chart. It's not a time chart. It's not 5 minutes. It's not a 30-minute. It's a volume chart based on 5,000 trades, right? Or a tick chart, sorry. Tick chart based on 5,000 trades. So what that means is that every new rotation is printed after 5,000 trades have hit the volume, hit the market. That's not 5,000 contracts traded. That is 5,000 individual trades. Okay, guys? Now, why do I use a tick chart versus a time chart? Well, it's simple. If we use a time chart, if we use a 5-minute time chart, or we use a 30-minute time chart, or whatever interval of time you guys are, want to use, people then, you're looking for that 5-minute period or that 30-minute period to close before you get confirmation for your trade, right? And that's what a lot of technical analysis people tend to do. But order flow is timeless, right? Order flow is real-time orders coming through. That's how you're basing your decision in the market. We're not waiting for confirmation based on time. We're waiting for confirmation based on what we see in the order flow. So this is why I use a tick chart and not a time chart for my footprint charts, okay? Furthermore, if you notice, when you use a tick chart, so this is for every 5,000 trades a new rotation comes, look at how the timing is different for each rotation, right? So for example, over here, you have 30 and then 39, so that's 5 minutes interval. This is now a 10-minute interval, 10-minute interval, 12 minutes, 12 minutes, so on and so forth, right? This was a slow day, as you can see. If I go near the open, right, where 6:30, it's now becomes a 3-minute interval, 3-minute interval, and so on and so forth. So using a tick-based chart also gives you a feel for the pace of the market, right? If you notice that your intervals are getting wider and wider between the rotations, you know that there's less volume in this market. If you notice that the pace is picking up between the intervals, right, you'll know that there's more volume coming in. And why is that? It's because, like I said, every rotation is every 5,000 trades. So if 5,000 trades are coming into the market faster and faster, right, your time interval is going to be closer and closer. And then you'll have an idea that the pace of the market is picking up. If the time intervals are wider, then you can infer that there isn't much coming into the market very quickly, right? So that's why I just wanted to explain to you why I use a tick-based chart. And if you guys are using Sierra charts, all you have to do is go here, chart settings, right? And it's number of trades per bar. So that's 5,000 that I have it tuned to. That's kind of like, there's no rhyme or reason as to why it's 5,000. For me, I experimented with a lot of different settings. I thought 5,000 made the most sense. Why did it make the most sense? Well, A, because the time intervals were easy to identify. And then B, one of the biggest things. What can you notice from these footprints? what is the most common numbers you guys see? This is a question. I'm hoping somebody can answer it. What is the most common numbers on the bid and the ask that you guys see? Does anybody want to give me an answer to that? Like, do you guys see 200 by 200 most often, or 300 by 300? What do you see most? Okay, you see 100 the most? 100 by 100? Okay. Well, in most of the rotations, if you take a look, right? Yeah, it's a few hundred per. So we've got 100 by 300, 200 by 200, 200. So very few of the rotations have 1,000, right? So when I see a rotation that has 1,000 on it, right? When you see a rotation with 1,000 on it, basically you know now there's volume in that market, right? See, most of these rotations, look, there's only one spot typically where you get like 1,000, and not even every rotation has 1,000, right? So those are the spots that you want to get involved in. You don't really want to get involved when you're only seeing like 100 or 50 or something like that. That's how you get chopped up, okay? Anyways, going back to the original reason why I brought this up. As I mentioned to you guys, in the trade plan, we broke down 42, 32, 50. I was looking for price to come, hold the offer, and then I was looking for this move lower, right? Ultimately, that trade got stopped out. We didn't make money on that trade. But look what happened if you're going to see the footprint. Going back to this, as I mentioned, 996 contracts got sold into the bid, right? So what does that tell you? That there's a lot of trapped sellers at the low there. And then what happened when we broke that, right? You would expect that 996, if we've got trapped sellers, right? That also means that somebody's been sitting there on the bid, providing that liquidity, right? So you're either going to get one of two things. These 996, if we rotate up, they're going to become trapped and we're going to move up, or these 996 sellers are going to get on side, right? So what happened was that we broke this 996, which was 32.50. We came down, but we immediately got bid up, right? So what does that tell you then? These passive buyers who are providing this liquidity to the 996 sellers, they came in and they immediately bid that up. So this is a very strong buying tail, right? This area here. They didn't get liquidated. You didn't see this big, shit the bed shank lower on these guys getting liquidated. We just dipped below and quickly came back up, right? So what can we infer from that? That this is a good buying tail. This low is probably a strong low. Like this low is going to hold. Then we came up. And then we get the opposite here. We get 989 buyers stuck at the offer, right? 989 buyers, or 989 contracts lifted here at the offer, but there's no the players who lifted that 989 are not being rewarded yet for their efforts, right? Price is not moving higher. So what we saw then was we saw this strong low that was in, right? Because these passive buyers didn't get liquidated, right? We dipped and immediately got bid up. Then we came up here and we see that these 989 aggressive buyers, right, got stopped in their tracks. And then we continued to move lower. So let me show you what I was seeing in real time here. Okay. Sorry, I just want to bring this up here. Okay. Okay, guys. So basically, you guys can all see this. So what happened after these buyers got stuck at the highs? After they got aggressive, right? They're now offside. Look, so as you move lower, these guys, these 989 contracts are offside. But what's happening as we move lower? What's happening to the order flow? What can we see from this footprint, right? We move lower. But look at the delta, minus 27 on that move. Does that show any signs of panic selling from these guys who are trapped at the top? No. What about this rotation here? Look at this minus 1,100 delta, right? But what's the range of this rotation? Is this range the same as what you've seen in other rotations of negative 1,000? No, it's not. It's compressed, right? Look at this range. This is a rotation with the range of minus 1,000 delta. Look at the size of this range. And then compare it to the size of this range with minus 1,000 delta, right? What does this tell you? If you're getting a large negative delta, you're getting this chunky volume at the bottom here, right? Does anyone have an idea what that means? Can someone comment and tell me what you think this means? We're getting this huge negative delta, but this compression in the rotation. What does that mean? Anybody care to answer? Yes. Epic Silly Rainbow. That is exactly that. You're getting that absorption. So the sellers are trying to take it lower, but those buyers, right? They got aggressive at the top, but they're defending that also. They're being passive here, right? They're soaking everything up down here. And then look at this volume in the footprint. 1,000 by 1,000, 1,000 by 900, 1,000 by 400. What would you then expect to happen once you break this? You would expect some liquidation. We break below. You don't get that liquidation. You're only getting minus 191 on the delta. You've traded 1,000 here. You've traded 1,000 there. You've traded 1,000 here, right? Once again, you traded 1,600 on the bid there, 1,000 on the bid there. We break through and we can only do 350, 150, so on. And we break through and we're still not getting that liquidation and we immediately get bid back up, right? What does that tell you? Those buyers are now starting, those passive buyers are now starting to show their hand and they're starting to turn aggressive. So you see that absorption, right? You see that we dip below and they don't liquidate. They immediately bid it back up. And then now they step on the offense. And then look what happens here. 1892 on the delta and you get that surge higher, right? So this is what I mentioned in the Discord group in real time after that. I said ESF update. We have been consolidating around 42.38, 42.39 in a small downwards channel. So this is a small downwards channel that I'm talking about, right? This from here and this right there. Small downwards channel after we put in the low. Passive buyers were present on each dip, which I just explained to you. As you saw that when we price dipped, you had that large negative delta, but you didn't get that large rotation. They are now showing their hand, and I think we should see a late day rally. This is why we are long. So the passive buyers were there on each dip, right? And then I said they are now showing their hand. So they were there. The passive buyers were there. We dipped below, didn't get the liquidation. They immediately bid back up, and that's where they're starting to show their hand now, right? And then immediately you get your aggressive explosion upwards. So once you saw this right here on the footprint or on the DOM, unfortunately, I mean, I saw this happening on the DOM. I then look to the footprint just because it's hard to keep everything in your head that you've seen on the DOM. So I use the footprint to kind of, look back at things I may have missed. But I saw this on the DOM. Unfortunately, I didn't actually plan to do this this YouTube live today, so I didn't have the market depth on my platform recorded. Maybe in the future, if I will plan a stream ahead of time, and then I'll make sure I record the market depth. But we have the footprint to show you guys. So we came down, we saw this here, price compression, minus 1,000. Should have been liquidated, they didn't. They got bid up. As soon as you came back up here, this is where you could have entered long with your stop just below here. Why do you want your stop below there? Well, look at this chunky volume, right? As mentioned. So now you have this structure supporting you, right? So think of it as like a wall. Like you've got a nice, or in this case, like a big, thick cement floor, right? So the floor is thick with all this volume. In order to trade through this area and hit your stop, they would have to put in a lot of effort. The sellers would have to really put in a lot of effort to drill through that floor, right? So think about a really thick, like, I don't know, like a 10-foot, I don't know, it's probably too deep, but like a 5-foot concrete or 5-foot like cement floor, right? Like you would feel comfortable leaning on that for support, right? Because it's going to take a lot of effort to drill through that floor, right? So once we came back up here and we were confident that these passive buyers have now turned aggressive, right? And they're starting to show their hands, that's when we execute long with your stop below there. And that is what we did on a live voice call in the Discord group. We said ES long 42.39.50 with a stop at 42.37. And then as it was end of day, I was trailing my stop pretty aggressively. As you can see, I got out at 42.45. But we got up to, I believe it was 50, yeah. Or no, that's today, sorry. But we got up to right up here at 42.47, right? So typically, if it wasn't a late day Friday, I would have probably held that trade a little longer, because what I would have wanted to see was that anybody who was still playing for that leg lower, I would have wanted to see them liquidate their position, and I would have wanted to see that panic buying to get out of my position. But instead, we kind of saw that a little bit, and I was trailing my stop pretty tight, so that's why we exited it at 42.45. And that's what we saw at the end of the day on Friday. Does anybody have any questions? Was that clear? Does anybody want to ask anything? I'll give you guys a minute or two to just absorb what I said and maybe think of any questions that you may have. Also, while I take a sip of water here. Okay, well, hope that made sense. I've got about okay, question here from Epic Silly Rainbow. That was amazing, man. Question: what are some signs we could have noticed from a top where you would have gotten out if it wasn't a Friday? Okay. So based on what I would have wanted to see is on the DOM, I would have wanted to see that quick skip up of prices, right? Like almost like an exhaustion or that panic buying from those who were caught short in that range. Because remember, right? If I'm going back to here, we have all these players here, right? Who were trying to get short, looking for a new low, but the passive buyers were eating it up. And then you also had all those shorts sitting on the offer over there. So this is where you had the passive shorts and then the aggressive shorts, right? So we didn't quite see it, but what I would have, and we might have later. I mean, I wasn't. It was very close to the end of the session there on a Friday. But typically, in a normal circumstances, what I would have liked to see is I don't know if you guys ever watch your DOM, then you suddenly see it skip up, like, 9, 10, 11, 12 prices in like a go, like almost as much as you've, like almost as fast as you've blinked your eyes. That's what I would have wanted to see to get out of my position. That's what I would have liked to see, to like kind of that panic from the buyers before I got out of my position. Yeah. Okay. So you know exactly what I'm talking about. That's what I would have wanted to see, to help me exit that. But we were like a minute to, like, from the close of the session. It was also like, yeah, on a Friday. There's just no point in waiting for that. You had made enough money in the last few minutes of trade. Just take it at that point. Yes, it would have looked like that, but I would have liked to see a bunch of zeros instead in the middle. Right? Like, so what's the reason I wanted to see zeros, right? Because as you're saying, this 11 by 46, 2 by 60, this is still showing that at this price, 2 people sold into the bid, right? This is still showing that 11 people sold into the bid. What I want to see is, I don't want to see any selling. I just want to see a panic of buying, right? I want to see 0, 0, 0. That's kind of what it would have looked like. So I want to see zeros on the bid. So I would have, for example, if it happened here, I would have wanted to see 0 by 46, 0 by 60, and then so on and so forth, right? So that would show me that now we've seen that panic, right? So maybe it's 0 by 46, 0 by 60, 0 by 115, and then you look to get out. Because that's showing that you're lifting the offer so quickly that you're not letting anything go bid, right? When it goes bid, that means someone sold into the bid. Does that make sense? Okay, great. So I'll give you guys a bit of a bonus here. Usually just reserve this for the group members, but just do a brief what I expect for this coming week, okay? So let me just bring up a weekly footprint to start. Okay. Brilliant. Yeah, futures are looking pretty rippy. Okay, does anybody want to jot down what they expect to happen this week, before I get into it? Anyone? Yeah, pretty much that. So guys, remember we have rollover this week, right? So I believe it's this Friday. Yeah, this Friday we roll on the contract. I haven't actually looked into the volume yet to see if I need to roll or not. but I don't think I will be rolling tomorrow. I'll have to double check that one. Let me just check that right now. I'm just going to quickly take a look on the CME website, see what where most of the volume was on Friday. So let's just have a look. And then if needs be, I can just roll this over right now for you guys. So yeah, okay. Total volume was slightly higher in September. So why don't we just go ahead and roll this right now? Okay, guys, just rolling. Bear with me. It's going to look pretty much the same on the weekly, but just... Okay, guys. So remember we had that 42.38.50, which was the high. Sorry. Right there, right? And then we had that 42.35, right? But what I would like to see, as Epic Silly has just mentioned, is that we need to see value built above here, right, for this week. So we've got this nice looking D-shaped profile, nice distribution, right? So what I'm looking for is I'm looking for tomorrow or this week, whatever, but on a weekly profile, this 42.38.50 to 42.33.50, this is our buy zone, right? This right here is the area where I expect positions to be built for an eventual launch higher. And remember, this is price discovery now, right? We should be seeing volume pick up, although that may not happen because of the roll and stuff. Market still might be a little waiting for that, and there is FOMC coming up. But what we are looking for is we're looking for positioning to build between 42.38.50 and 42.33.50 for that eventual move higher. Where will we turn bearish? Well, look at this nice value pivot. See how this is value low and this was value high. So this is a great zone here. So if we lose this zone, 42.18.50 or 42.18s, we could look to get onto the bearish side. So nothing bearish as such, big picture, until we are below 42.18.50. And you guys can see that, right? Like, it's pretty self-explanatory for those of you that are familiar with profiles, that we've been one time framing, 1, 2, 3, 4, constant shifting of price and value, price shifted, value within value, price shifted higher, built the value above that area, right? And so on and so forth. So what we're looking for is price to come into this area. This is our buy zone, build positioning for eventual move higher. Under 42.18.25, that's where we turn bearish. Between 42.33 and 42.18 is kind of, we're just expecting rotation like this. So that's what we're looking for this coming week. Below 42.18, you see this one time framing. That would be a key level. That would break multi-week one time framing. So this low here would be very interesting. If we break this, but then immediately bid back into it, then that would be a strong tail and a sign for continued move higher. But under 4206, you may see, because keep in mind, look, we've been in this range, right, from May 8th. If I'm just going to compress this for you. So we've been in this range from May 8th, gradually pushing higher and higher, right? And so what do we have in here? We have positioning built up, right? We have positioning built up for this move through all-time highs. So if we break this one time framing at 4206, this positioning could start to unwind. So below 4206, you likely see a cascade of stops and quite a move lower. Okay? So that's what I'm seeing this week, guys. Positioning built for a move higher between 4238.50 and 4233. See that positioning move higher between 4233, 4218. We get that rotation. So might see quite a bit of chop. Below 4218, that's where you can start looking for shorts. And those shorts should really pay off below 4206 because of the positioning that you've had weeks on end building for that break of 4238. This would break the one time framing. This is key, guys. All right. Anyways, that's the end of the webinar. I'll give you guys 5 minutes or so to answer any questions or ask any questions that you want. Any questions? I would kindly ask, though, that if you guys did enjoy this webinar, to please give me a shout out on Twitter or something like that. It isn't easy to put together something like this. So yeah, I would just appreciate that. And then could possibly do more of these in the future. And if you guys enjoy my work, if you guys enjoy the way I teach, if you guys want daily plans and weekly plans on a day-to-day basis, if you want live market commentary through voice and typed out during the trading week, if you guys are looking for live trade calls, then please join the Discord group. The link is in the in just below the YouTube video in the description. You guys can join and you can try it out. It's a 7-day free trial. You'll get full access. And feel free to cancel anytime. I mean, if you're looking to just improve your trading or learn order flow and profiles, it's a great spot. Yeah, so feel free to check it out, guys. Okay, Epic Silly. Do you think we can rip and trade above 4238.50 tomorrow? Okay, let's have a look at the daily then. Do I think we can do that tomorrow? Well, let's have a look. So far, I mean, so far it does seem that way, right? We are at an inside day, right? That's RTH inside day, from the 10th and the 11th, right? And we have been, like I said, one time framing. So if we do gap up tomorrow, it's possible that we do continue. Yeah, it could happen, but we could join that at the open. But I'm gonna have to see how the overnight session plays out. But so far so good. Remember, we have this inside day. Rules of the inside day: you play the break 4238. Or you can play the breakdown of this. This is on an intraday basis, guys. Remember what the weekly plan was, right? The weekly plan that I just mentioned to you guys was that 4218, 4217 is where we're looking to get short on a break of that and then hold the offer, right? That's the big picture. But excuse me. Intraday, you have an inside day, so it'll be very interesting to see how we open tomorrow and what the overnight inventory is like. You're welcome, Mr. Trader. Thank you for taking the time to tune in. I mean, it really means a lot for you guys to come out tonight and giving me your time. Hope you guys enjoyed that. Remember, if you enjoyed it, just give me a shout out on Twitter, or if you'd like, check out the Discord. Link is below. Hope you guys enjoy your Sunday evening, and that concludes our stream. Take care, guys.